digital assets into their core strategies. In addition to stablecoins and tokenization, agentic commerce is also growing on chain. Agents are speeding up processing, scaling large volume purchases, and enabling 24/7 on chain operations. Well, joining me to weigh in is Greg Ganiga, Manager of Digital Assets for KPMG. Greg, great to have you here. Thank you so much for joining
Yeah,
me.
thank you for having me.
Well, here we are, the beginning of Digital Asset Summit 2026. So tell us what's going on when it comes to digital assets and what is actually happening when it comes to institutional adoption.
Yeah, so in my 4-year career at KPMG as a blockchain subject matter expert, we have never been busier than we are right now. The founders of Blockworks here are saying we are basically in like an institutional super cycle, and I would say that's definitely the truth. We're seeing interest from GSIBs, super regional banks, asset managers, wealth managers, payment companies. Everyone is exploring their strategies revolving around tokenization, around stable coins, offering digital assets, and of course the custody and the security and the governance that goes along with that. So we're seeing lots and lots of interest from the biggest household names in finance.
Yeah, and as you mentioned, we have a gathering of TradFi, DeFi, as well as policymakers here at Digital Asset Summit 2026. So tell us what you think are the key drivers and what is the data telling you?
Yeah, I would say the big drivers are, for one, the technology has become very mature. We're seeing that, smart contracts came around was almost 11 years ago. They've proven themselves to be robust. But the real big thing is, I would say, from the regulatory perspective, in the last year or so, we have not only the Genius Act that passed last summer, but we also have a lot of the regulators coming out and saying to, encouraging or allowing financial institutions, please go ahead, experiment. You can go ahead. There's nothing wrong with this, and then everyone is free to look out where blockchain can overlap and provide efficiencies in the traditional financial infrastructure.
Yeah, and speaking of which, of course, we're keeping our eyes on the nation's capital for progress on the regulatory side, but at the same time, there are questions about regulatory hurdles, and of course, with strategic execution comes challenges as well. So, what are you watching, and what still needs to be done here?
Yeah, we're watching, of course, the Clarity Act. There's all eyes on that. So, what's going to be the results of that? Of course, that's a huge implications on market structure. Of course, when you have well-defined legislation, that tends to stick a lot more than effectively what the regulators are signaling to everybody. So, I think there's a lot that hinges on that. But KPMG is going to be there every step of the way, advising our clients based on the outcomes of that. So that I think those are the things that we're waiting to see, and then we think that there's going to be even more people, even more institutions diving in after that point.
Yeah, and Greg, I'm sure navigating risk and compliance
Yep,
also comes into the equation here. So,
absolutely.
what does that actually look like for institutions?
Yeah, so it all comes down to making sure people have the right governance. They're looking at risk in the right way. KPMG, we've been supporting the digital asset industry for 10 years roughly. We employ seasoned experts. We have proprietary technology specifically for looking at blockchain information. And so when people are on their journey, they really need to make sure that they're looking at those security elements, that they're paying really close attention to custody and smart contract risk. In the world of blockchain and DeFi, transactions aren't always as reversible as they are in traditional finance. So that requires way more rigor when building out the controls and governance and policies.
Yeah, and Greg, while I have you here, you mentioned technology.
Mhm.
One technology all of us are keeping our eyes on is artificial
Of
intelligence.
course.
So tell us about the role of agentic commerce.
Yeah, so I'm actually here moderating the agentic commerce panel with a lot of the biggest builders in the business at this right now. So I would say right now there's a few things that need to happen. Of course, we're seeing that the LLMs, the Gen AI platforms, they've come a really, really far way every month, every week. There's significant developments making them more accurate, making them more reliable. I think we still need to see a little bit more security guardrails, and we still need to see the hallucination risk come down in a lot of these LLMs before people are really willing to trust those systems with transacting with one another autonomously without a man in the middle effectively. But we are seeing this hybrid where you have some Gen AI automation mixed with some man in the middle with some users so that it is creating more automation, it is creating more efficiencies. But we know that the technology is only going to get better and better as it goes on, and that we're going to have millions of agentic employees transacting with one another, processing information, and will be a face of many businesses.
Yeah, and finally, before I let you go,
Yeah.
especially since you're going to be moderating this panel and being a part of it, tell us how blockchain is set to be a transactional
Yeah.
player, especially when it comes to agentic commerce.
Yeah, well, I would say that that's what blockchains are. Permissionless blockchains, they are settlement layers. They are a settlement layer where anybody with an internet connection, whether that's an agent or a person, they have the ability to enter the global financial system effectively. And it makes sense that there's no intermediary, there's nobody that can shut down these systems. So I think the agents themselves are going to prefer these rails because they know that it has the assurances. And of course, these agents don't have social security numbers or anything. And most traditional financial infrastructure, there's a little bit of KYC and stuff that you need to do in there. So blockchain, where it's just cryptography, it's wallets, et cetera, it seems to be like the perfect proving ground for agentic commerce.
Well, Greg, it was great talking
Yeah,
to
thank
you
you.
ahead of your panel. So thank you so much for joining
Yeah,
me today, and thank you so much for all of your
yeah.
insight.
Thanks for having me.
Thank you.
Appreciate it.
Well, ringing the opening bell this morning over at the New York Stock Exchange's Banco Marco to celebrate the 20th anniversary of its listing. Now, this is a major private bank in Argentina that focuses on low and mid income individuals, but small and mid sized companies. The bank emphasizes organic growth as well as profitability and efficiency with strong deposit funding and leadership in personal loans. The company is headquartered in Buenos Aires, and to honor the occasion, Jorge Brito, chairman, will be ringing the opening bell to kick in today's trading session. And of course, ahead of the market open on this Tuesday morning, we're keeping an eye on futures as well as oil prices. We are looking at U.S. stock futures pulling back this morning, and we are also looking at oil soaring, including the WTI and Brent contracts. Now we'll throw it over to the New York Stock Exchange, where the trading session is about to kick off.
Coming up next, market movers, the opening bell. We'll be right back.
Welcome back to Market Movers, the opening bell live from Digital Asset Summit 2026 at the Javits Center in New York City. Now, crypto security giant Ledger is making a massive push on Wall Street. The firm is now aggressively targeting institutional investors, and Ledger just opened a New York office and appointed former Circle executive John Andrews as CFO. The move comes as Ledger explores a highly anticipated U.S. IPO that could potentially value the company at over 4 billion. Now, this does come at a time when demand for secure enterprise-grade infrastructure is skyrocketing. Joining me live here at DAS is Sebastian Baudon, who is VP of Enterprise at Ledger. Sebastian, great to have you here. Thank you so much for joining me.
Thank you for having me.
Well, first and foremost, there have been a lot of announcements coming out of Ledger. And when we're at a summit like this, we do expect to hear from a lot of organizations. So, first and foremost, tell me about the latest and greatest.
I mean, the latest and greatest is yesterday we opened our office in New York. I think it's a really important move for us. We've been in the US, we've had teams here for a while, but having an actually be home for this team and also to be just closer to everything that's happening in the city has been really important. We've seen a massive shift over the past 12 to 18 months coming from traditional finance, coming from banks, institutions, and a lot of them are here. So being in the center of where everything happens is really important for us. So we had an event last night to open our space to our partners, potential customers, existing customers, and our teams. And it was lovely to start off that opening and with great things to come and great things to build in the future.
Yes, and Seb, speaking of the future, of course, there are expectations that you may go public as a company. So tell us a little bit about why you decided to open a New York office, especially given the regulatory landscape here in the US right
Well,
now.
I think that's one of the big reasons, right? The regulatory landscape is what has created that shift. It started with ETFs a couple of years ago, BlackRock, et cetera, Genius Act, last year, hopefully clarity this year. And as a result, what we've been seeing is, institutions that had, and that's been my big takeaway is that, I've been working in the digital space for many years. And 20 years ago, when you would go see companies and talk to them about digital, they had no clue, Fortune 500, or it's the internet, what was it's something that they wanted to do. But now when you go and see banks and financial institutions, they all know about blockchain and crypto, and they've
Yeah.
been working towards building infrastructures. They were just waiting for the green light from the regulator. They don't have a full green light. They haven't, or I guess it's close enough to green. But everyone, I don't think there's a bank that doesn't have either a tokenization, a stable coin, a custody project in place, or a trading platform that they want to build for their customers. And the reality is that they want to build on the safest possible infrastructure. And since we've built the gold standard for security in digital assets, we really have an amazing moment to, be able to help them secure all their projects.
Yeah, and speaking of which, SEC Chair Paul Atkins is here at the event as well, so we will be hearing from him later this
That's
morning.
exciting.
Yeah, absolutely. And you work as VP of Enterprise, so
Right.
tell us what you're focused on right now. Why?
I mean, I think that the main focus is we have two focus, right? The first one is on the product side and innovation, making sure that we build what our customers want. I think again, we have the goal, we built the gold standard and we've built it over the past 7 or 8 years. And now when you take it to market and you take it in front of your customers, you need to adapt it to customize it. So really having the best of breed product for our customers is the first thing. And then working hand in hand with them to be able to integrate, to be able to go into their tech stack. Everyone's got a different tech stack, so we have to be able to adapt to that. So it's really my work and my team's work is really to spend as much time as possible with all these customers to try to help them navigate a new space because it's a new space for them, using what they've built in the past. And I love this idea that bringing blockchain technology into TradFi, this idea of like new fi or next fi, whatever you want to call it. But that's where magic happens, right? When you bring innovation and technology, on the base, on a very strong base, which is the financial ecosystem, which lives here in New York.
Yeah, and speaking of which, that is a new term that I haven't heard, adding the "fi" at the end, but I'm sure that will be something that we continue to hear. So finally, we all know that institutional competition is heating up in this space. So tell us about the competitive advantage that Ledger brings.
I think so. This is about this space, but it's also the next space, right? So what's happening right now, obviously, is AI and agentic commerce that's really coming into space. So you have agents now who are going to have access to value and be able to spend money online, etc. And so what we really believe is that, and our CEO, Pascal Gauthier, wrote a really great piece called The Revenge of the Atom last week, which he published last week. If you haven't read it, I encourage you to do so. And the idea is that in this world of AI, in this world of full digital, the moat is hardware, right? You need a kill switch to be able to prove that you're human, if you're a human being, but also to be able to say, I approve this transaction. And that will only happen, like software-based solutions will not allow you to do that. Only hardware is going to be able to do that. So the Atom is getting revenge, and we're lucky enough to have been building a hardware company for the past 11 years. So it's really our moment to be able to like do that. So that's what I see. I see that importance of the Atom, the importance of physical device to really create a moat in security.
Yeah, and in a nutshell, for those of our viewers who have not read that, what would you say is the key takeaway from that report?
I mean, it's really this idea that in order to fully secure a transaction, you cannot do it with your phone. A phone is not secure. Our team, our technical team, our hackers team, like white hat hackers,
Mhm.
found an Android phone, over 1 billion Android phone, a critical problem, critical issue, which allows you to hack these phones in less than 60 seconds. There's 1 billion phones out there. So there's no way that you can transact in value because if your phone has value in it, any coins, etc.,
Yeah.
at any moment you could get hacked. So the idea to have a separate piece of hardware that has a secure screen, a secure element, which is what Ledger has built, and we're the only ones who have built that technology, is the way to really secure value. So that's the idea.
Well, Seb, it was great talking to you. Thank you so much for joining us as we kick off Digital Asset Summit 2026 in New York City.
Thank you.
Thank you.
Coming up next, Market Movers, the opening bell. We'll be right back.
Welcome back to Market Movers, the opening bell live from Digital Asset Summit 2026 at Javits Center here in New York City. Well, the balance of power in global crypto is shifting back to American soil, driven by surging institutional adoption as well as a dramatically warmer regulatory climate. Under SEC Chair Paul Atkins, the U.S. spot market is gaining ground against offshore giants. And over the past year, U.S. exchanges have nearly doubled their spot market share, jumping from 8% to 15%. And at the same time, Bitcoin liquidity on American platforms is now deeper and growing faster than anywhere else in the world. But as the US pushes into the derivatives market, can it dethrone some of the offshore heavyweights? Well, joining me live here in New York is Randy Little, partner at 50T Funds. Randy, great to have you here. Thank you so much for joining me.
Thank you. Great to be here.
Well, we are kicking off the summit here in New York City. And here we are as we're watching volatility across all asset classes, not just in the US, but also around the globe. So, when it comes to the digital asset space, in particular crypto, where are we in the adoption cycle?
We're still very early. I mean, second inning, I would say. I mean, obviously, there's been a tremendous amount that's happened over the past several years. I mean, people have been saying the institutions are coming for, I don't know, just 5 or 6 years now, but I think that's actually happening. I think that we've been through the first initial phase of a lot of experimentation in the crypto space, which is one of my favorite parts about it. We're trying lots of different models. We've seen what works with tokens, what doesn't work. And now we're seeing how blockchain can be applied to the traditional world, to banking, to capital markets, to trading. And I think the regulation that we've been waiting for is starting to come into place. And I think as that happens, we're going to see a sea change in the way that the traditional markets work.
And speaking of sea change, of course, we're keeping an eye on the regulatory landscape, and SEC Chair Atkins will be speaking at this summit as well. But when we're talking about capital markets, in particular public markets, there are a lot of expectations year end in 2025 and as we kicked off the year. But what does the IPO window actually look like right now?
It's difficult now. I mean, a lot of the companies that have made it public, we've had a number in our portfolio actually at 50T. But the whole crypto space is traded off about 50% or so, in some cases more. I think the market is not really differentiating between the crypto companies as much. They kind of trade it as kind of a basket, it almost seems like. But I think that Bitcoin and the crypto space is leading the rest of the market. So, I mean, I would expect that over the next couple of months we could see a correction in the more traditional market. But I think at that point, the crypto space, Bitcoin, Ethereum, will probably reach a bottom and start to lead us out of that into the end of the year, would be my expectation.
Yeah, and Randy, I'm sure at 50T you speak to many stakeholders, not just in the US, but also outside of the country as well. So when it comes to Bitcoin liquidity, what are you actually seeing right now?
I mean, Bitcoin liquidity, I mean, it's as deep as it's ever been. I think that we're going to be reaching a tipping point of adoption where Bitcoin is considered, I think, one of the best collateral assets in the world. I mean, I've believed that for a long time, but I think that the world is coming around to that, and that will come with the integration of Bitcoin into regular capital markets. You can now buy it spot, ETF. There are the digital asset companies, which are a little controversial. That's another way to buy it. Well, there's perps on Bitcoin. You can buy futures on CME. So, and soon, I think almost every FI will have the ability to take Bitcoin as collateral, use it for loans. I think that we see that happening in pockets, but I think as soon as we get clarity in regulation, that'll be kind of a must-have service, I think, for most FIs.
Yeah, and when we take a step back, we know there is a geopolitical tug of war, and that has been affecting all asset classes. But here at Digital Asset Summit 2026, we know that there are policymakers, TradFi, DeFi attending. So when we look at the institutional appetite, can you break down what is actually happening below the surface?
I mean, I think it's probably what you're hearing a lot here, that the institutional appetite is centered around you know, efficiency, liquidity, 24/7 trading. So that comes in the form of real world assets coming on chain, RWAs. We believe that all assets of value will come on chain eventually. I think that will take 20 years, maybe even 30 years for that to fully play out. So I think that some people were initially impatient with the pace of that change. But I think that the fundamental change that we're trying to make, which is to rewire the entire capital markets system, rewire the payment system, is not going to happen overnight because the change is foundational. Like we saw in fintech, that was kind of an improvement in user interface for users, but still all of the old systems, all the legacy was still behind that. And so fintech was always constrained by that. With crypto and real world assets and blockchain, all of that gets rewired. When everything comes on chain, you can remove a lot of the intermediaries. You can remove the rent seeking. You can lower costs dramatically. So a change that dramatic
Yeah.
will take time, but the payoff will be huge.
And finally, before I let you go, there are plenty of announcements expected to come out of this year's Digital Asset Summit 2026. But when it comes to actual innovations in digital assets, what are you most excited about, and what are you betting on as you look forward?
I think that in this sort of area of the blockchain space, it's not really about, I think, major step changes. I think everything is going to be about evolution in working the power of stable coins, the power of blockchain into the back office, into the way payments flow, into the way trades flow. And I think that will happen in a very incremental fashion. So I think there was some announcements this morning about like Securitize partnering with NYSE. We have people stepping in to launch new funds with Superstate. I just saw that just before I
Yeah.
literally walked in here. I think we'll see a lot more like that. But again, it's going to be baby steps in a way. But once everything happens, it's going to be. I think we're going to look back in 5, 10 years and not even be able to recognize the world that exists today.
And very quickly, what do you think about the role of AI within all of this?
Oh, it's huge. I think on a very macro level, the people that have been developing in the crypto space, I think, are among the most technically savvy, certainly within the financial services industry. So I think we'll see the most rapid adoption within companies in the space, and we're seeing that in our own portfolio companies, actually. But I think this has probably been said many times, but crypto is actually, I think, well suited for autonomous AI agents, for AI in general. It's a very technical space. It's best operated using command line, using kind of automated flows. So I think that we'll start to see a lot of capital allocated and moved by agents, and I think a very natural place to do that will be on blockchain.
Well, a lot to keep our eyes on. So thank you so much for joining us today, and thank you so much for sharing your perspective.
Thank you.
Coming up next. Market movers, the opening bell. We'll be right back.
Welcome back to Market Movers, the opening bell live from Digital Asset Summit 2026 at the Javits Center in New York City. While the digital asset treasury trade rose and fell last year along with crypto prices and speculation, but while the stocks of the biggest stat players like Strategy and Bitmine Immersion have been beaten down, research from Inversion reveals that public companies have mostly outperformed the S&P 500 in multi-year periods after taking on crypto. Now, crypto adoption goes beyond storing assets on a balance sheet, and firms are embracing blockchain for secure transactions, fraud reduction, as well as real time cross border payments. Now, tokenization and even decentralized applications come into play here. Well, joining me live to break all of this down is Santiago Roel Santos, founder and CEO of Inversion Capital. Great to have you here. Thank you so much for joining me.
Thanks, Remy. Good to be here.
Well, it is quite a time as this Digital Asset Summit gets underway here in New York City. So, where do you think we are when it comes to the crypto cycle?
I would say there's a divergence of there's a lot of adoption happening. In fact, public companies like Visa, like MasterCard, Coinbase, Robinhood, they're adopting crypto because they see the opportunity in the same way that they see AI. Um, Token prices are a different story, and tokens are just generally uninvestable. They don't capture much value. They don't behave like securities. And I think investors have caught on to that. And that is probably the biggest theme of this cycle, which is you're better off investing in the public market that is appreciating the technology for what it is. And it has less risk, it has more execution. Most of these are founder led companies. So the risk reward is just not there to go out and invest in your DeFi token, in your L1. Most of these are very overvalued. And the risk reward is just much better in the public markets.
Yeah, and Santiago, I think that distinction is very important when we're talking about digital assets as well as crypto. And given that we are continuing to monitor geopolitical tensions in the Middle East, I do want to get your take on Hyperliquid and that volume we saw as the conflict got underway, especially since we're seeing a lot of activity on the weekends.
Yeah. Hyperliquid, since HIP-3 got implemented, allowing to trade tokenized commodities, it's been an explosion of interest. I was sitting over the weekend when the war broke out, sitting with a lot of macro hedge fund guys, and they were all discussing what the open's going to be on Monday, and said, "Have you looked at Hyperliquid?" And they were blown away. The only time I felt that was with stablecoins. That was over 6 years ago, where traditional people would say, "Wait a minute, I understand what this technology is all about. I don't want to go out and send a wire transfer because the stablecoin just does that much better." And I think it's going to continue to proliferate. It is explosive, more so because it's attracting a lot of users to come and use Hyperliquid. I think there's now over $1 billion of open interest. I think that 10x or 100x over the next 5 years.
Yeah, and Santiago, I think that is really significant because sometimes when we're talking about these technologies, it's about the use case here. So as we head into the rest of 2026, there are a lot of expectations. And when we're talking about what institutions are doing, how do you think all of this is going to shake out?
I think stablecoins as a just-in-time money transfer is going to be a massive theme. You had Western Union here today talk about it. It's a company that I've followed and have always wondered why they haven't implemented stablecoins. When you think about what stablecoin does, every business is going to use stablecoins over the next 10 years. Any business, like 40% of the S&P is trading internationally. Well, the stablecoin fits a very clear use case for that type of business. And I think that's going to continue to be a theme, regardless of where rates are, regardless of whether there's geopolitical tension or not. This is very much a secular trend, and businesses are really waking up to that idea. So I think that bodes well for crypto. That doesn't mean that your token price of Ethereum or Solana or some of the other networks are going to benefit. There's a lot of competition in the stablecoin space. Like if you're a stablecoin issuer, there's now 10, 20 of them. And so, fee compression is real. But companies that own distribution, that have a relationship with the end customer, the end state of this technology is the end customer doesn't realize that money is moving in real time. They just see a lower rate, they see their money faster, they see approval faster. The best example of this is Figure in the public markets.
Yeah, and finally, we are here at the summit. We're expecting to get a lot of announcements. We have seen some coming through so far. And of course, we're paying attention to them. But when it comes to the deal making environment in 2026, what do you think that will look like?
I think there's going to be a lot of M&A activity, just companies that have really smart engineering teams. You just saw MasterCard buy BB&K. we're going to see more of that. And again, public companies saying, okay, I have to have a crypto strategy. Who can I go out and acquire? And I think there's a really good engineering teams out there that haven't had product market fit, that have struggled to get adoption. They don't have distribution. But if you're a large financial institution that wants to leverage this technology, you're better off acquiring someone like BB&K that has done the hard work, that understands the technology, and you can just run it through your distribution. So I think that's going to be a major trend. Right.
And very quickly, we have less than 60 seconds here. So for the American retail consumer that is watching right now, what is the impact to them?
I think the impact is not so much that, a lot of the apps that they use on their phone are not going to change. People don't think about money. They don't switch bank accounts every day. The benefit of this is you're using your financial institution like JP Morgan, and they get a lower rate. They get their HELOC approved faster. The end state of crypto is invisible, and the asterisk to that is polymarket, and prediction markets have really been front and center to the interest of people to trade and to speculate on geopolitical stuff. And I think that's really the killer application of crypto, and probably will continue to be.
Well, Santiago, we will have to leave it there, but thank you so much for joining me today as the Digital Asset Summit kicks off. And thank you so much for all of your perspective.
That's right.
Well, that does wrap it up for Market Movers, coming live to you from the Javits Center at Digital Asset Summit 2026. Thank you so much for watching and have a great day.